So it is October 2023, and what is going on in the housing market? So as I'm sure you guys have seen out there, interest rates right now are about 7.5% to 8%, and we still have low inventory out there. So we still are seeing some multiple offer situations, especially if the property is in pretty good shape. We are seeing a strong demand, but we're also seeing some buyers be picky out there. If the house needs a lot of work, or the property backs the highway, has small bedrooms, whatever the case may be, if the house is a really, really good house, people are willing to pay above market value for the property, even with the high interest rates. When we look at it, what is causing, some of that lack of supply, there's still very low foreclosure numbers. They are higher than what they were a couple years ago, but that's because there was a moratorium during the pandemic. They're still lower than what they were pre-pandemic levels. So when we look at it, what kind of makes sense in there, is, Airbnb is going to, give us a run for our money. Not so much in our area. One of the concerns is, hey, is Wall Street buying these homes up and renting them out? Once again, not so much in our area. With New York being a strict landlord-tenant laws that are out there, and it takes much longer in New York to close property than it does other areas, it's not as liquid. I don't think Wall Street is super eager to jump into and say, hey, I want to buy these properties in New York and rent them out. Other states, they're very heavy in there, but in reality, they only make up a few percentage of all the homes being bought or all the homes owned in the U.S. owned by institutional buyers. Most investors are mom and pop investors that own 2, 3, 4 properties, throughout their life in their portfolio. So one of the things that is affecting our area a little bit longer is the high-rise construction rental buildings. So there's a quote out from the home scene: apartment construction is roaring along its 40-year high. That means more choices for renters, likely at lower rents as everybody jockeys for tenants. I see that happening, definitely out there, as we're seeing a lot of those buildings come up, and 95% of them are rental buildings. And I think they will continue to be filled because I think a lot of places in Westchester have done things to bring in people, and especially where people are selling their properties and they want to get a nice luxury building into rent where they just made good money on the sale of their home. I think that is going to keep the demand up there. And as we see more, we may see prices stabilize, maybe a little bit more incentives, from people to take certain buildings. But I don't think we're going to see any type of crash in the rental prices, which will keep up, home prices as well. So we are seeing a little bit more of a little bit inventory kick right now, which is a good thing overall. But we usually see the big pop come in the spring. The fall is a secondary market, so we do see a good amount, but we've seen a little bit more. So just something to keep an eye on. There's still not enough inventory out there, but we're watching and seeing what the trends look like out there. As we've talked about before, one of the biggest reasons why most people are not selling their properties now is because they have those low interest rates. About 70% of homeowners in the U.S. have an interest rate below 4%. And you know what? For a lot of them, it just makes sense to stay. It's a good deal for them to stay at their property rather than buy a new one. So you're seeing a lot of those first-time home buyers buy now, or what's happening with life factors. Either if you've had children or more children and you need bigger space, kids are off from school, you're downsizing, divorce, whatever the case is, most of those life factors is what we're seeing, the reasons why people are making a move, and those take time. That's why we're not seeing it happen overnight. So when we look at what's going on with that, where does that create for people? People are sitting on a huge amount of equity in their property. I think more now than ever, comparatively. And that's a lot of with prices increasing, those low interest rates, people are paying down that. And, when you have more equity in your home, what does that do? That gives you more opportunities to leverage it. You could take home equities. You can buy investment properties. You can pay for your kids' colleges. Gives you more generational wealth and be able to move money around a little bit easier when you have that equity in your home. Some of the trends that we are seeing a lot is a lot of the people that have owned their homes for 20, 30, 40 years are selling and now either moving in with the grandkids to be closer to them or moving next to them. So we're seeing a lot of that. It was a trend before, but the saying goes, it takes a village. As you guys know, I have 2 small kids. Without my mother, mother-in-law, sister, sister-in-law, I'd have no hair left on my head. So, it's one of those things that we're seeing that community in their household, with the family come together a little bit stronger. And I think we're going to see that a little bit more. Right now there is a big population of people that are empty nesters and don't have, their kids anymore in the home. And we're going to start to see that turnover over the next, I'd say, 2 to 4 years come in and bring some more inventory, on the market as things turn. Remember those life factors. So, overall, where are prices for 2023? What NAR is actually the only one projecting that it's going to be negative, about 0.5%. But the averages of the major people that KCM surveys is about 3.5%. And I think that probably is in line with what we're seeing here. On average, we may see 5% in certain things. Some properties sort of 10% growth. But, I think we're averaging right around there. And, where do prices go in 2024? If I had to take a guess, I'm going to say 3 to 5% growth next year, depending on what interest rates do. If they drop, it's a 6%, I think we'll see more growth from that. If they come down, 7, give or take here or there, I think we'll see that 3 to 5% growth, which in my opinion would be a healthy growth, and I welcome that out there, especially with seeing a little bit more inventory come out there. So overall, strong market as we finish off the year. Let's see what interest rates do. Definitely something to watch. Inventories are low, and we're not going to see a huge amount come on through the winter months unless we have some warm weather. So any questions, feel free, DM me, give me a call, see what's going on. Happy to help and connect.